Hi guys, my name is Harry Yotis. I've been a professional trader for 20 years now. Started in 2005 working for National Bank Financial, and for the past 10 years I've been trading on my own. So let's get started with the daily market update. As usual, we start with the market, which is the S&P 500 daily chart. Okay. Here is Thursday, December the 4th. We've had a pretty good week and a pretty good 2 week run here. Okay, so usually when we get into December, we start getting lower and lower news flow. People start going on vacation. So I think after the Fed next week, things are going to start to slow down a lot. Okay, that doesn't mean the market won't go up or drift up or maybe probably won't crash. Okay, it'll probably be held up before the year end. So things will just start slowing down after next week's Fed meeting, I suspect. Okay, but as of right now, this is the day we started. We went way lower. You can see there's a wick here if you can see it. We started way lower, but then we came back. Okay, there is a bid, it seems, in this market going forward, at least to the end of the year. That's my view. Okay, so let's get to the technical picture. As always, okay, we mentioned before, bullish. We don't have to talk about it. Okay, we can bring in the moving averages. The 50 is the red. We are solidly above the 50, so we're bullish. We got a little scare here, and as this Bitcoin liquidation event was happening, this was the capitulation event ending, and then boom, no reason to sell assets anymore. Time to go up. Okay, and the picture technically is bullish. Okay, let's get rid of these moving averages just so you can see a clearer picture. Okay, clearly bullish. Okay. And we kept mentioning that we wanted to go above this level right here, the 685. Literally touched it and then acted as resistance. You can see it never penetrated it. Okay, so still bullish. However, everything is bullish. However, I would love it to break this level here going forward. I think it does. Okay, and that's because if you can see here, we have a double bottom here, one bottom here. Like if you can draw it, I guess we have a boom, boom, double bottom, with this being the neckline, if you will. Okay, and if you know anything about technical analysis, if it breaks this level, the measured move is the difference between here and the low of 652, which brings us to our measured move of about 715. I thought it'd be the end of the year. I thought it'd close between 700 and 720. I gave myself a little bit of a, scatter plot here, a little bit of an area to work with. But this measured move in this double bottom, if it breaks the neck, will be around 715, 717 area. Okay, so let's get rid of this guy. So technically speaking, we are bullish. However, we don't just look at the technicals, we pair it with sentiment, and we can look at the fear and greed index as a proxy to that. And yesterday we were covering near the fear, and then boom, a huge jump in extreme fear and fear. We were bordering it slightly into the fear, but this is a huge jump from like 26 to 39 with the market basically doing nothing. So it's telling you that some of the underlying indices here dropped from extreme fear to see we're getting the market momentum is now neutral. It's not fearful or extremely fearful anymore. The strength is extreme fear still, and the breadth is still at fear. Okay, the put call is at fear. Everything is, we're getting into the safe haven demand of greed. So everything is starting to cycle into, like when we were here at like a 6, we thought it would go up to neutral and greed before we would start, not being as bullish as we are. Okay, so this is a big jump. It could be a couple more days or maybe a couple of weeks, like we said, for this to go to greed and extreme greed. Doesn't have to, but I think we get to the greed at least. Okay, so pairing the technical analysis with the sentiment, I am still bullish heading into the end of the year. Okay, so what happened today that was of significance? Not much. It was a slow day. The one thing that did come out, which we always look at, is initial claims. Okay, and initial claims, if you can see it, cratered 191,000. Okay, the previous one was 218. So this shouldn't be happening if we're in a recession. What recession? This is telling you that not there yet. We're still very, very low. If you look at the max, or we can't look at the 5-year, it's still like, this is the, the fearful during the pandemic, a lot of claims. But now it's like we're not even exploding higher. Okay, we're even going lower. So I don't see where the panic is. Okay, so with this quote unquote good news in the job front, and we don't know the jobs yet. Okay, we've seen the previous report. We haven't seen jobs actually diminishing, like negative 50,000 for the month, or zero, or something like that. Okay, so this bullishness when it comes to jobs should have the opposite effect when it comes to interest rates. Like interest rates going into the Fed meeting next week should be like flat. He shouldn't cut. However, if we look at the Fed Watch tool, this is for the meeting coming up on the 10th of December, next Wednesday, 87% chance of a cut. Okay, this is perplexing to me. I mean, you're getting okay news. I mean, the jobs aren't great, but they're not cratering either. It's okay. Yet we have an 87% chance of a cut. So something else is going on, maybe in the bond market. Something underneath the hood is making the market say that the Fed will cut. Okay, this is a certainty. If it's above 67%, like 2/3 at least, you know that the Fed is going to do exactly what the market does. It never surprises the market. Okay, which is surprising to me. Before it was a 50-50 chance, and now all of a sudden this past week or two, when nothing really happened, and we're getting better. I mean, market's going up, and jobs are not cratering. Initial claims, at least we get one clue that jobs are not cratering. I would think it would still stay at 50-50, but no, something is telling us market knows better than the Fed, and the Fed is probably going to cut next week. This is very buoyant for stock prices. It reinforces our bullish narrative. Okay, so having said that, on a slow day, let's revisit some of our trades here, especially in the critical metals section. We've seen a lot of move in the critical metals. We see critical metals corp, literally in the name. I mean, it's been going down, but today, big boost. Okay, up 20%. Okay, this is not my preferred vehicle because I prefer to play critical metal plays in the U.S. mostly, and the ones that actually are making money or have investment from the government, which is MP. Okay, this is my preferred vehicle of trade for the critical metals. And as you can see, a little recap, we entered it. We were waiting to enter it after this spike as it was going lower, and this was our trigger to enter a bullish engulfing. Okay, and we entered it around here. Okay? So we entered an option structure that expires in next year. Okay, so now they're just consolidating around this level. Okay, we have a 60-80 call spread going here. So this, as you can see by the RSI, and this is like PPO, but it's like MACD. Okay, it already made the crossover, the bullish crossover. However, everything, I mean, you don't even need the technicals. You can just see, I mean, you don't need these stochastics, I should say. You can just see that this sideways consolidation has brought everything to neutral. So any move up or down will be exaggerated. So I think once it breaks above this 66.20 level, which it tried twice to, and it was rejected, it's going to get to 80 very fast, this 82 level, okay? So this is why I picked the 60-80 call spread. It'll give us the best odds of success. And we entered it with at least a 5-to-1 risk-reward ratio. It cost us around $4, and we're going to make 20 because 60-80 is 20. It's a 20. It's very simple math, guys. Okay, so the other preferred play that I also have a position in is energy fuels. Okay, and this is like the competitor, rare earths. Okay, these guys, we entered here when it was consolidating, it broke down, but now it's coming back up. This is good. This gets, once it breaks this consolidation pattern downward and then recovers quickly, this is a trap. This is a bear trap. Okay, so. And today we saw that they were bid, they meaning the critical metals and rare earths in particular, they were bid today. Okay, this stock was up 8%. We saw critical metals up what was it? Look at the top left here. It's top left says 20% gain. Okay, UUUU today was an 8% gain. MP, what was it? Today was a 5%. Decent. It's still stuck in this range, waiting for the breakout. But UUUU looks like it has to still break out above this level, these highs. Let's mark it so it could be a bit more clear. It has to break above this high, above this, and this area here too. This area of congestion and this area is a lot of activity was done here. Breaks above that level, let's say between 16 to the 18 range. It breaks above that. The next one is 22. Okay, and it looks like it's having this momentum, especially with a bear trap here. Very good. I'm really liking this space, and I think it goes higher in the coming months. Okay, another one that rare earths US is Lithium America, is a lithium play. This one is not as good, okay, because they're not really targeting lithium. It's more abundant than rare earths, I would say, even though rare earths are not that rare. But Trump has specifically targeted and supported MP and UUUU and all these US-based rare earth plays. Whereas LAC, we haven't heard anything. This is just pure speculation that he's going to support lithium in the States. Who knows? It's up for grabs. Okay, so those are the main ones that I like to talk about. The critical metals plays in the States. Okay, MP consolidating, waiting to break out. UUUU bear trap looking to break out. And on the outside fringes of the frontier of the rare earths is LAC, Lithium Americas. Okay, so let's recap. SPY, bullish, waiting for it to break this level here to confirm the double bottom and have a measured move all the way up to 715-ish. Okay, sentiment coming back, so it's fulfilling its prophecy. When it was at 6, fulfilling the prophecy of going to neutral and greed, which I like. Okay, Fed watch tool, 87% they're going to cut, which is supportive of stocks, and the initial claims are cratering, which means the jobs market is the opposite, not cratering, holding up. People are not filing for unemployment claims. Okay, so that's it, guys. I hope you like what you heard today, and thanks for watching. If this helped, please like and subscribe, and of course leave your comments below and I will answer them as fast as I can. So looking forward to tomorrow, Friday, end of the week. Let's see what happens. Take care, guys.